As a price action trader, timing your entry is everything. And when it comes to trading the inverted hammer pattern, you can't just trade every inverted hammer you see. There are specific conditions where it works best. In this tutorial, we'll go over when to trade it, how to set your entry and exit, and the price logic behind it. First, let's understand what an inverted hammer actually tells us. Focus on the structure of the candle, the upper wick, the body, and the lower wick. Don't worry about whether it's green or red. The color doesn't matter. What matters is the wick-to-body ratio. A valid inverted hammer will have an upper wick that's at least twice the size of the body, and the lower wick should be very small or nearly absent. You can't trade every pattern you see. Most of them will fail unless they're at the right place. Start by drawing your supply zones or resistance areas. These are spots where price previously reversed or consolidated. Once price starts moving back up toward those levels, that's where you want to pay attention. This works best on the 5-minute or 15-minute time frame, so stick to those for consistency. When price reaches your marked zone and forms an inverted hammer, wait for the candle to fully close. Then, if the next candle breaks the low of that inverted hammer, you can enter the trade. Place your stop loss just above the high of the rejection candle. As for the target, aim for a minimum 1-to-3 risk-reward ratio. If price continues in your direction, consider using a trailing stop loss to lock in more profits. Your entry and exit rules should remain consistent every time. Here's a helpful tip. If this setup forms in the second half of the trading session, the reversal tends to be stronger. Keep that in mind as you scan the market. Now, another key setup is when price approaches round number levels. These are psychologically important prices, typically multiples of 500 like 20,000 or 2,500 on the index. These levels often act as resistance, especially when price moves quickly toward them after a strong rally of 100 to 150 points. If an inverted hammer forms near one of these round levels, the chances of a reversal increase. One last case to watch for is when the inverted hammer forms near technical indicators that you might already use, like the 15 or 21 EMA, or within the golden zone of a Fibonacci retracement. Personally, I stick to pure price action, so I won't go too deep into indicators. But if you rely on tools like these, adding this price action strategy to your indicator setup can make it even more effective. So to recap, look for the inverted hammer at key resistance or supply zones. Confirm the structure, small body, no significant lower wick. Wait for the candle to close and enter only if the next candle breaks the low. Use a stop loss above the high, and target at least a 1-to-3 risk-reward ratio. Stick to these rules, be selective, and trade only when the setup is clean.